Let's talk now about the 5-year meme stock. Has it been 5 years?
It has. Interestingly enough, that's how long it's taken me to grow this beard, 5 full years, and it's still very patchy. But.
We need a little bit of it, but I'm ching on that one. But you can't talk about Robinhood without talking about the 5-year meme stock anniversary, January 28th, 2021. Take us back. Where do you want to start with this?
Yeah, I think we got to go back to 2019. This is when Schwab, E-Trade, and all the other kind of legacy brokers had to follow Robinhood and cut their trading fees to zero. So that kind of set the tone.
Right. That set the table for 2021. Yeah.
Exactly. And then 2020, obviously, we've got the pandemic hitting in April.
Yep.
Yeah, we get the stimulus checks. We have the world shutting down, basically people on their phones doing whatever they could throughout the day as we waited for more info. And then in the background, we had Keith Gill, aka Roaring Kitty or DeepFingValue on Reddit. He was posting throughout late 2019 and early 2020 about GameStop being undervalued and that the market was ignoring its potential for a broader digital turnaround. Funnily enough, he actually tweeted at me and a bunch of other technicians. And I didn't see it. He was like, "Hey, what do you guys think of this GameStop chart?" And I did not see it. Otherwise, I might have been along for the ride. But
when you say you didn't see it, like you were getting so many messages, it sort of fell through the cracks. Like, what do you mean you didn't see it?
Yeah, just like it was in my notifications. I didn't see it. And then like 3 years later, somebody tagged me in it again and was like, "Dude." And I was like, "Oh, I didn't know." But at least I got a follow out of it. On Twitter, he does follow me. Not that he'll ever contact me. But
he's
anyway, shout out Roaring Kitty.
A loyal viewer of Retail Edge, I'm sure.
Exactly, yeah. So if Keith Gill, if you're watching this, shout out. But anyway, that kind of set the table. In August 2020, that's when GameStop shares really started to accelerate to the upside. That's when we saw the conversation pivot to kind of real-time platforms like Stocktwits, like Twitter, where more of the public were getting involved in this. We were seeing a lot more upside momentum, and it just kind of took on a new energy. It
became, of itself. Yeah,
exactly. So that continued until late 2020. Then January 28th, 2021 was kind of the infamous day where, prices accelerated so much to the upside and the brokerages got caught kind of in the middle of the clearinghouses and the settlement rules. And so Robinhood was forced to kind of implement the sell-only orders that many retail traders, I would say became the victim of because they couldn't buy or, add to their positions. They could only sell. So that kind of stopped a lot of the momentum in GameStop, helped mark a top, and kind of put a bit of a damper on the whole meme stock rally.
Yeah, the great squeeze of January 2021. But in some ways, sure, this was a flash in the pan. This was a moment in time where there was just a confluence of factors that all took place. I mean, you couldn't have scripted something like this. And who knows if it'll happen again? I mean, you could probably argue it did happen in silver already, yeah. But it wasn't a flash in the pan in some senses. Like a lot of what happened infrastructure wise is sort of still here, like 24/7 trading. Like that is a thing.
Yeah, we got a little better, but there's still a lot of room for improvement, as Vlad Tenev of Robinhood would outline in the last couple of weeks. Really, what we need to get to is moving from a T+1 settlement to an instant settlement using the blockchain. And that
I think that's coming. Yeah.
Tokenizing securities, getting them on the blockchain, allowing people to transact across borders 24/7 whenever they want. That's really what's needed to kind of support this level of activity. But in terms of your question, in terms of what has stayed the same, retail investors have stuck around. They're now 20 to 25% of daily trading volume. That's a massive amount. Behavior that drove the meme stock craze, the classic fear and greed is still rampant today. That's not going to change as long as humans are pressing the buttons. We're going to have those biases and issues and do the same silly things over and over. But we're seeing, like you said, meme stock movements in a lot of other areas, whether it be silver. Every week on Stocktwits, there's a new name that I'm seeing where there's a massive disconnect between the underlying value and the price, but it's driven by kind of this retail fervor.
Yeah, and the biggest thing for us, obviously, at Stocktwits is that retail isn't this, esoteric or niche part of the financial community that companies could ignore. I mean, it's 25% of daily volume. That is a massive number. You can't laugh at that. I mean, you need to market to that, right?
And I think that's the biggest. That's the biggest thing that's changed, right? Retail has kind of gotten the respect it deserves, and it's being courted by Wall Street and company executives. Really, they're looking to build strong, diverse shareholder bases, and they recognize that as the pool of DIY investors continues to grow, they're going to need those people, as part of their company, as loyal shareholders.
Yeah, and that's where the origins of this podcast started, is retail investors who are looking for an edge. And a lot of times those retail investors will find one long before the institutional money can make a move, right?
Yeah.
I had just said, sort of speaking of marketing, somebody who is doing a lot of marketing, and this is related obviously to the retail play and meme stocks, is of course GameStop and GameStop maybe 2.0, back in the news, up 18% in January. Last I checked, another 7% on Monday. Ryan Cohen just doing a little bit of a media tour here. He's got a new incentive structure. We've already talked about that, but what's your takeaway on Stocktwits?
Yeah, the bull case here is that Ryan Cohen is going to be able to pull off a Berkshire-esque transformation for the company. He's teased a very big, quote unquote, very big consumer deal to acquire another company that could 10x the value of GameStop. So leaving us kind of in the dark regarding what that could mean, but he's made it very clear that the core business of selling video games is not what GameStop is going to focus on. They're going to use their massive cash pile, which they only have because of the meme stock phenomenon, to figure out how to pivot this business and create like a holding company. So we don't really know what's going to happen until we hear about this potential acquisition, but Michael Burry's on board. He's done 2 or 3 Substack posts outlining his kind of bull case, and he's a believer in Ryan Cohen and the management team's ability to pull this off. So business transformation or more smoke and mirrors, who knows?
I just think it's so interesting that Michael Burry has been like the poster child for bears in this market, right? And somebody who has, thrown water on like the crypto craze, Bitcoin, what have you, but then comes in hard charging about, of all things, GameStop.
Yeah, it's a bit ironic, but I would say the capital structure and the underlying business, again, like I kind of hate on the stock as we discuss it regularly, but the point is like the underlying conditions are there for this to really turn into a $50-100 billion company. The problem is we're just basically, you're betting on one person because he's not provided any real guidance in terms of how the company is being managed. So we'll have to sit around and wait for his acquisition target to be outlined and hope for the best. But with that being said, retail has been right in 2026. They're extremely bullish. The stock is up. So, good for them. But I think longer term, this acquisition that they make or multiple acquisitions will have to be very kind of accretive to get the business going.